Hello and welcome to the Wendell Effect. My name is Brandon Wendell, and I'll be your guide through my view of the equity index futures for the upcoming week. Before we get started, just a reminder, we're not broker dealers or investment advisors. We're going to look at this information from an educational standpoint only. We're not telling you to buy, sell, or hold any particular securities, giving personalized recommendations. All markets do involve risk of loss. As always a situation, no matter what we do, we can never eliminate the risk. Do not trade with money you cannot afford to lose. And keep in mind that we are not subject to trading restrictions, so we can have a position in security and initiate one at a time. You can also stay in touch with me, and I appreciate the feedback. You can hit me up at brandonwendell.cmt@gmail.com. You can also find me on Twitter quite regularly. I'm very active at TraderBW. And you can also search for the Wendell Effect, obviously, on YouTube. Please hit the like and subscribe buttons, and maybe even the alerts. That helps us out quite a bit. So for the week of June 11th, let's take a look and see what's going on in our markets. As far as the ES, we pushed up against supply on the weekly chart. So you can see we got kind of squished down as far as a kind of a smaller range as we hit that area supply, 43.4875 to 44.55. We've been watching that for a little while. And we still have plenty of momentum, so we should be able to push through. Remember, the NASDAQ has been the leading market to the upside for 2023 for the most part. So that is the one that's going to tell us when we're going to turn around. So until we actually hit strong supply on the NASDAQ, which we'll be looking at next, by the way, but until we hit strong supply there, we're going to continue to push to the upside most likely. So going down to the daily chart, you can see we actually have a little bit of room to the upside before we hit daily supply. So we may actually continue to push up. Might see a little bit of sideways movement before the Fed. Before I forget, we should check about the news for this week. So here I am just searching the red, if you will, on the high impact numbers that are coming out this week for the U.S. only on Forex Factor. And you can see that for this week, June 12th through June 16th, we got the FOMC economic projection statement and Fed funds rate on Wednesday. We also have CPI numbers coming out on Tuesday, and before the Fed on Wednesday, PPI numbers. Now, CPI is the trailing number, that's consumer price. PPI typically leads by about 2 to 3 months, if not sometimes more. But the big number we're waiting for today, waiting for this week will be actually really the press conference. So when Jerome Powell starts to speak on Wednesday, that'll really start to move the markets. On weeks like this, we typically get sideways moving until Wednesday when the news comes out. Then we get big explosive moves both directions, and then we eventually take on a trend. So be very careful getting into positions before the news comes out. So getting back to the chart, we may be slightly bearish off the open on Sunday going into Monday, where we pull back a little before we rally towards the end of the week. Again, just based on whatever Jerome Powell has to say, that'll really dictate. But we're not getting much direction out of the ES. It's just kind of following along. And I was suggesting a pullback first because you see we have a negative divergence here where prices moved up, but we didn't on the indicator. Keep in mind, we're also rollover week. Well, actually, I think Friday was rollover, so we should see more volume now on the September contracts for the indexes versus the June contracts. We're rolling over a week before the expiration of these contracts. So make sure you trade the right contract, always the one with the most volume. Anyway, moving along here, we can see that this is what I was talking about for the beginning of the year till now. The NASDAQ's up 35% almost, and the S&P is only up 13% in comparison. So much more bullish, and that's the one that's pulling us higher. So looking at the NASDAQ, we've reached another target. And you can see last week on the weekly chart here, we hit that 1.272 projection of our previous impulse. Probably could have used off this impulse as well to see if there's overlap. As a matter of fact, let's do that. I'll go out to my charts. Oops, I was right here. And we'll go to our continuous weekly. And there we go. Let's fix that. Clean up the chart. And get the measurements again. So the first one was this, and second one would be off this impulse, which we corrected. And what I look for is kind of an overlap or confluence, if you will. And you can see that there is a little bit of confluence here, right around that 15.4 to 15.5, because you got overlap from two different measurements. That's a higher probability turning point for that market. So it's no guarantee it's going to turn there, but it's a higher probability. That's all we're looking for, is probabilities. And actually, the one that it did bounce off of, I didn't have in here right now. It was the 1.272. You can see that's where we stalled right there. And that is off the, actually, it stalled off of 2. Look at this. It gives this one as well. Yep, 1.272. You see what I'm saying by confluence. So if I zoom in, you'll notice that this area in particular, oh, that's not what I wanted actually, but it'll work. What I wanted to do was, yeah, I can't remember where the shape is. Been a little while since I used it. I guess we can do this one. There it is. So you can see there's an area of confluence. Nope, that's not what I wanted. It doesn't matter, but you get the idea. There's overlap where there are 2 in the area right there. The 1.272 is overlapping. And then our next target, that area, is also an overlap area. So that's where we're likely to continue up to on the NASDAQ. Again, this is on the weekly chart, bigger picture, before we start to see any more stumbling. And that is somewhere around our weekly supply. So it looks as though we're getting a little bit of a pullback this week to start off the week, but then with the Fed news coming out on Wednesday, probably clear sailing for Thursday and Friday to run to the upside. Looking at the daily chart, pretty much same picture. You can see the detail a little bit more. I actually went on the last impulse correction, impulse. And again, we've got some stopping along the way at 15,248 for one pause point, and then that 15.5 area on the weekly I was mentioning. Going down to the 4-hour chart, we're seeing a bit of weakness. I didn't mark it off, and you notice higher highs on price, lower highs on momentum. Again, that usually leads to a bit of a pullback before we can go higher. So that's kind of what I'm seeing. Monday, Tuesday might be a little bit of weakness or sideways before we start to rally after the Fed news. Looking at the Dow, this is a much weaker index. You can see that this has no momentum. We can't get above 60. We can't go below 40. We're just pretty much going sideways here, aren't we? Just very choppy and quiet, somewhat bullish, but not bullish to really give us higher highs. So definitely don't want to be long on the Dow or Dow components versus the NASDAQ. And you'll see in the sector rotation, if you watch my other video, those sectors like technology and communications that drive the NASDAQ are outperforming everything else by far. So again, not much to say about this. We're coming up against supply. So this may lag the other indexes, even if the markets are very bullish. And on the 4-hour, same picture. We rallied up quite a bit in price with new highs, but the indicator pulled back. So that's telling me that we're likely to get a pullback. And this being a weaker index, I don't see us pulling back to 33.4, but we could. That's the next strong 4-hour demand. We might just pull back to about this 33.8 or 900, just below 34,000, or even at 34,000 before we go higher. So if you're looking for a short position, the Dow might be offering you something versus the NASDAQ and the S&P. You don't want to short the strong indexes. You want to short the weak ones. And again, speaking of weak indexes, here's the Russell. I didn't mark it off, but actually this is also potentially supply that we just came into on the weekly. So again, if I go back to my chart on the weekly, we go to the RTY, adjusted continuous contract. Let me clean this chart up here. It was down on the 4-hour, but you can see it right here. You've got this basing and drop with follow through to break to a new low, and we bounced off that last week. So this is a much weaker index, and if you're looking for shorts, the Russell might have it for you. So looking at the daily, we also hit daily supply. It's kind of stacked with 2 zones. That's really the weekly zone as well that I was mentioning earlier, and we're pushing back down. We might get caught at 1840 again if the NASDAQ drags this up. They were fighting last week too. This happens quite often where one index will fight the other and they won't move as much as they possibly could if they were all in agreement and moving together. So keep that in mind with your day trades. And the 4-hour chart also showing much more weakness. We already had the highs and failed to really continue to move up with momentum. We've already started sliding. So this is definitely the weaker index, the weakest market. And I would see 1776 as a good downside target if you could find somewhere to short along the way. So that's what I got for you for the indexes for this week. If you got any questions, please let me know. Hit me up at brandonwendell.cmt@gmail.com. You can also find me on Twitter regularly. You can message me there as well at TraderBDub. And please hit the like and subscribe button. I really appreciate it for your help. I will talk to you again next week. Until then, trade safe, trade well. Take care, everyone.